Okay, good morning, good afternoon, good evening, wherever you are in the world. I'm Nicolas Véron. I'm a fellow at the Peterson Institute for International Economics, and it's my pleasure to restart the financial statement series after a brief pause in the summer. Today, we have a session about payments, and specifically about the cross-border payments program that has been launched, as we will hear very soon, by the Committee on Payments and Market Infrastructure, the Committee of the Bank for International Settlements in Basel. So we already have a bunch of acronyms here. The CPMI is the committee, the BIS is the bank, and Tara Rice is the head of the Secretariat of the CPMI at the BIS. Tara studied at American University, then at University of Denver, then at Boston College, where she got her PhD in finance in 2002. Then she joined the Federal Reserve System, first at the Chicago Fed from 2002 to 2008 as a financial economist, and then at the Federal Reserve Board in Washington, D.C., where after several positions, she was chief of global financial institutions. Then in 2015, she joined the US Treasury, where she was Deputy Assistant Secretary for International Financial Stability and Regulation. And then for 2 years at the Financial Stability Board, which is a committee hosted by the BIS in Basel, member of Secretariat for 2 years until May 2018, where she was involved particularly in the evaluation of the big G20 financial reforms triggered by the great financial crisis. Then after a stint at BlackRock, she came back to Basel at the CPMI Secretariat, the Secretariat of the Committee on Payments and Market Infrastructures, of which she became the head in June 2020. Tara has a number of publications, and there is one publication I cannot not mention, which is the Geneva Report on the World Economy, number 22 in 2019. It's an annual series where she was a co-author together with Catherine Petralia, Thomas Philippon, and I have to say myself as well, of a study on banking disrupted by fintech and big tech, so issues that are very related to what we will discuss today. Joseph Sommer studied at Brown University in physics and then at Columbia University in chemistry before moving to Yale Law School, where he got his JD degree and joining the New York Fed in, I think, September 1988, where he became, a couple of years later, a senior attorney. So Joe is what people would call a Fed lifer, stayed at the New York Fed with an interval of 6 months at the Bank of Japan, but otherwise until 2019, when he retired, but he's still very active. For example, he's a member of the Uniform Law Commission, which is involved in what in Europe we would call harmonization of law in individual US states on a number of financial related issues, and also a very astute, I should say, observer of the payment space and of a number of issues related with financial infrastructure. With that, Tara, over to you. I will move your slides if that's okay with you.
Yes, please. Thanks.
Okay, do you see them well?
Yes, perfect. Thank you, Nicolas, and thanks very much for the opportunity to present here and to share our work with folks. We can turn to the next slide. So as many of you may know, domestic payments generally work pretty well, and they continue to evolve. So this chart shows fast payment system development across the world, and in the last about 20 years, fast payment systems have really grown. About 60 jurisdictions now have launched fast payment services. Added to that, the pandemic has increased end users' demand for digital payments and also the potential of fast payment services as an alternate to cash. Next slide. That said, cross-border payments suffer from a number of challenges, and many of these are well known. Low speed, high costs, limited access, and limited transparency. When I'm in person and talk about the cross-border payments program, I ask people to raise their hand if they've ever had to cross-border payment in their lifetime, and you'll find that most people have in some form or another. So most people are aware of the frustrations and the challenges and frictions in cross-border payments. And it's for this exact reason that the G20 Cross-Border Payments Program was launched in 2020. It was launched by the Financial Stability Board in coordination with us, the CPMI. It's a very ambitious response to these challenges. A lot of progress has been made, and I'll discuss that, but we're now at an interesting inflection point. Next slide. So before we start to talk about the program, let me just give you an Economics of Payments 101 lesson. Payments are known to be to have large network effects and two-sided markets, as we would say. So if you think about a credit card network, on one side we have merchants, on the other side we have consumers, and they both want different things. And because it's such a large and highly connected industry, there are a number of coordination failures and collective action problems in the network industry. So there's three roles for central banks in the payment system or the payments ecosystem. The first is a catalyst, so to use their convening power to address coordination failure. Second, as a standard setter and overseer to address negative externality in the private sector payment services. Internalize externality through regulation, supervision, and oversight. And then the third role is also, or could also be, as a service provider themselves. So by providing public goods, such as central bank money, which we consider to be quote unquote ultimate safe settlement asset, but they can also operate payment and settlement systems themselves. These aren't mutually exclusive and they work best in combination, so to speak. Next slide. So that's the role of central banks. Let me talk now about the role of the Committee on Payments and Market Infrastructures. We have three mandates. First, as a global standard setter to strengthen regulation policy and practices, as a forum for central bank cooperation, and third, promoting the safety and efficiency of payment systems and FMIs. The committee is chaired currently by Sir John Cunliffe, Deputy Governor of the Bank of England. And governance-wise, our committee reports to the governors of the BIS Global Economy meeting. We were established in 1990, which makes the committee 32 years old. Next slide, please. So with that background, let me provide an overview of the G20 Cross-Border Payments Program. The BIS, so it's CPMI, plus the BIS Innovation Hub, is leading the majority of the program. And this chart shows the 19 necessary elements or building blocks to improve cross-border payments. They're arranged here in a bridge to illustrate that we need to use all of these elements to bridge the gap between domestic payment systems. You can see the red boxes, the CPMI, BIS Innovation Hub led building blocks, are the more technical ones in nature. Right? ISO 20022 is a messaging format. API is for harmonizing transfer of data and information, payment system access, operating hours, multilateral platforms are all very technical in nature. Whereas the FSP has more of the, or owns more of the regulatory and supervisory frameworks, data framework sorts of topics. Next slide, please.
Before we get there, so there's one anti-money laundering, combating the financing of terrorism box, which is a Financial Action Task Force. But the IMF and World Bank have one box on payment corridors. Can you explain what a payment corridor is, just out of curiosity? Sorry.
Sure. The connection between those is called a payment corridor. It's a single route. Okay. There's some corridors that are more robust supervisory regimes. So the idea here is to think about how to improve those sorts of payment corridors, which is right in the toolbox, right down the alley of the IMF and the World Bank.
Got it, and apologies for the interruption.
No, not at all. Next slide, please. Last 2 years, we've been writing reports, a lot of reports. We've been doing what to mitigate them. So we now move into the implementation phase, which is going to require a different set of expertise, a different set of actors, a broader engagement. And we've turned our priorities to what I call a priority on prioritization. So with 19 building blocks, that's, let's just say 19 building blocks is a lot. We really need to hone in on what are the specific things that can be done by the standard setting bodies, by the other public authorities, and by the industry to really meet those targets that are now in place. So what are we prioritizing? Generally, we see three broad themes: payment system interoperability and extension. This is really a technical issue. We have the technology to do this, but it needs to be carefully thought about, and I'll talk about some interoperability models. But along with that, we can't just technically link our payment systems across border. We need to address legal, supervisory, and regulatory frameworks, harmonize those across jurisdictions. That's a big lift. We also need to think about cross-border data exchange and message standards. Anyone who's worked in data localization or thought about data localization, data exchange knows that that is also a very difficult challenge to address. So we're going to focus on these three themes. And how? Well, you'll find out in October 2020. We're going to release the FSB will release its progress report, which is going to include our forward thinking and prioritization for moving into this next stage of implementation. The other critical element is going to be enhanced engagement with non-G20, non-CPMI jurisdictions. Think about it, some of the jurisdictions that most need help in improving cross-border payments, and more engagement in public-private partnerships. Next slide, please. Stablecoins present another global coordination challenge. So here's how it started. Launch of Libra 2019 was really the wake-up call for authorities and others. And Nicolas, to the next slide, I'll tell you how it's going. So in July, CPMI IOSCO published their guidance on stablecoin. We've been working on this for 2 years. In short, the high-level takeaway is a stablecoin arrangement that performs the transfer function or the payments function is considered an FMI, financial market infrastructure. And if it's determined by the relevant authorities to be systemically important, it is expected to observe all of the CPMI IOSCO principles or our standards for FMIs. We provided clarification on 4 principles. We also noted novel and new elements of stablecoin arrangements that need to be considered. We talked a little bit or wrote a little bit about systemic importance and the meaning. However, there is a very broad view that regulation, supervision, and oversight of stablecoins alone might not be sufficient for them to be safe and efficient payments, so to speak. The main risk, which is outlined, or risks, which is outlined in the BIS Annual Economic Report Special Chapter this year about the future of money, the monetary system, notes that stablecoins and their interaction with crypto and DeFi could lead to a fragmented and fragile monetary system. So there's additional and complementary work right now ongoing by the standard setting bodies, additional improvements, not in stablecoins, but in existing payment infrastructures, and the exploration and development, of course, of central bank digital currencies. Next slide, please. CBDC involvement or work continues to rise. We've been doing a survey on CBDC work at central banks for 5 years. You can see that interest and work has increased quite dramatically since 2017. And now we see work moving from research, reports, to proof of concept and development or pilots. Next slide, please. But this also requires international coordination and cooperation. There's a number of critical questions that need to be addressed at early stages of CBDC development in order to make them interoperable. So who can hold and transfer retail CBDCs? Can non-residents be granted access to a retail CBDC or residents only? If non-residents can be granted access, then only when visiting the country or when abroad. So you can see there's lots of questions that really need to be thought at the outset or the early stages of development. It's what we like to call the clean slate approach. So we're building something sort of together, and we need to think about these interoperability, interlinking questions early on. Next slide, please. So that leads to the interlinking of payments report that we've done. This provides a framework and outlines a set of factors and components for jurisdictions to consider if they're thinking about interlinking their payment systems. There's quite a lot of activity right now, say in Asia with India looking at bilateral links. A lot of progress being made in this area. Next slide, please. But there's no one-size-fits-all approach. So all the jurisdictions are starting, as we would say, at different points of development. We've got different priorities, different motivations, different systems, so to speak. So there's a number of high-level models of interoperability of payment systems that we can consider. And there's trade-offs between these different models that needs to be considered again at early stages. So for example, if I look at a high-level model of interoperability, that middle line, a single system is going to be hugely efficient, but it's also going to be very costly to build. Making systems compatible, but not building a new one, it's going to be less of an investment cost, but probably not as efficient. Next slide, please. So let me just close with a couple elements of global cooperation and collaboration. First of all, public-private discussion is hugely important. There's a number of working groups and discussions that we're starting to develop. One is a payment summit that's going to be hosted by the FSB along with the CPMI later this year. We're thinking about how private sector, public sector advisory groups can help us really think about the difficult questions and, on implementation. And then we have some technical expert groups that are looking at very specific technical elements. Public consultations and calls for ideas trigger a lot of industry responses. We've done a number of consultations already. We've got one right now on payment versus payment, and we'll have another one planned soon on message format harmonization, or ISO 20022. Webinars and workshops to share information, outreach can involve both traditional firms and new players. And then finally, a very important piece of this, especially to emerging markets and developing economies, will be technical assistance to really focus in on what improvements can we help the emerging markets and developing economies implement, and the IMF and the World Bank will take the lead here. So with that, Nicolas, I'll turn it back to you, and I look forward to the discussion.
Thanks. Joe.
Hi. I don't know why they invited a lawyer here, because our professional defamation is always to be as negative as possible and find as many problems as we can. And so this is a project that is extremely worth doing, but is going to be extremely hard to do. And I'm just going to snipe at a few of the problems we're going to have in doing it. There's going to be a lot of innovation that's required on many levels. There's going to be operational innovations, just thinking of end party security, which is always a frightening notion. There's going to be more straight through processing. There's going to be netting against counter value, which requires some legal innovation, et cetera. Handling non-payment streams on payment systems, keep going. Takes a lot of innovation in architecture, legal operations. And this innovation can be very, very scary. I mean, if you're a cynic, half the time you hear the word innovation in banking space, you think obfuscation. But no, I'm talking about the real stuff, and it's going to be hard. For instance, IT costs keep going up. The pecuniary costs of this are going to be extraordinarily high, but it's probably worth it. Then there are going to be a lot of problems with, I'd say, tighter interconnections and centralization are going to have quite a number of costs, quite a number of benefits too, but say look at 24/7 payments, which I think everybody wants. That means 24/7 markets. That means if there's ever going to be a resolution weekend, there will be no weekend. It happens in real time as the payment stream goes on. How do you do that? I don't know. That's a problem we're going to have, we're going to face. There are other.
Sorry for interrupting, Joe, but by resolution weekend, of course, you mean a weekend during which authorities try to resolve a failing bank, right?
Right. But there will be no weekend.
Exactly.
Yes. I think it's doable, but these are all problems and complications that are going to arise in the future. There's also and this depends a lot on how the system evolves. There's the problem of failure. If you design a system that doesn't fail, its failure is going to be extremely catastrophic. And that's especially true for tightly interconnected systems, because it's hard to have tight connections, have a failure here, and have this part go on very nicely. And loose connections are, of course, much less efficient. And they're more likely to break down. Take your choice. For instance, 2008 again, the payment system actually didn't fail. It kept ticking very nicely, because it was really strong. So we didn't learn anything from it. We learned a lot about repo and derivatives because they both did fail to some extent. And we found that derivatives failure was much less scary than we thought. Repo failure was every bit as scary as we thought. We're going to have a lot of problems with risk and risk management. And since I'm more interested in the questions and talking, I'm just going to mention one thing. There's a huge tendency in this business to think that you've solved a risk when you haven't. This is my own specialty. There's, in say, payment versus payment. You want to have one payment coming in, be held safely for a while, and then when the other payment goes in, they both go out at the same time. Makes everybody safe. Real nice. The problem is the US has had this for quite a while, and it was based on about the legal certainty of this was based on a few 19th century cases, and you can find dozens of 19th century cases to the contrary. But for years, everybody, even though everything's supposed to be legally sound, the regulators didn't catch it. The banks didn't catch it. In the end, a bunch of payment lawyers have caught it, and we're working on it now. But the system was certified safe for, I don't know, 20 years now, and payment versus payment, and it wasn't. It will be, but you often like to kid yourself on risk. So I'll stop here because the questions are going to be more interesting than talking.
Many thanks. We already have a few questions. I have some of my own. Let's start with a question from Ted Truman. Ted asks about the clean slate that Tara referred to in terms of, I think, particularly CBDCs, but he observes that many jurisdictions have already started. He mentions China and Sweden. So how clean is the slate, and does that matter, Tara?
Thanks, Nicolas, and thanks, Ted. So that's an excellent point. We like to say, I'll add one piece to my clean slate argument, and that is there's an expiration date on it. So you can only get so far in development before then, as noted, you kind of lose that ability to become interoperable. However, I would say that I think we're at early stages of development for CBDCs across the board. Right now, there's just 4 live, including China. But China actually is working, PBOC is actually working with the BIS Innovation Hub and sharing lessons and sharing sort of the technical details of how they built it, as well as how their pilot went. So decisions need to be made pretty soon. We've got a little bit longer, but then we're going to run out of quote unquote, runway for that opportunity.
Obviously, and there's a question by Greg Smith about this. It sounds almost surreal given what's happening on other fronts of the China-US relationship, that this work seems to be so harmonious and cooperative and constructive. Does it really work that way? Is there a prospect that consistency at the global level will be there and there will be genuine coordination in Basel, despite all the stuff that happens in other matters of China-US relations?
So geopolitics is definitely a challenge, especially in this day and age. However, we try and take the geopolitics out of some of these more technical, decisions. The People's Bank of China, PBOC, is in fact a CPMI member. They attend our meetings, and we have discussions about developments across the board. So at the level that we're working at to improve cross-border payments, I can say that coordination is good. We're taking it sort of down down a level from those geopolitical discussions.
What about Russia? Russia is also a member of your committee.
Russia is also a member of our committee. They have stepped back from involvement in committee work as the conflict as it emerged and as it continues.
BIS has introduced sanctions on the Russian central bank, if I'm correct, or more accurately, implemented sanctions from some of its members.
Yeah, so the sanctions against Russia and its citizens are well known. I don't want to get into the geopolitics of that discussion. I can tell you that we've done a lot of thinking about sort of on the ground what these implications are, and but we'll stay away from the geopolitical Russia conversation.
Sounds reasonable. Joe, how do you think about those geopolitical aspects? You, as I mentioned, you retired in 2019, but many of these issues had already started being a bit complicated by then, and you followed them since. Is it really a time when we can think of global cooperation in issues like payments and plumbing, or is it doomed to fail because of the politics?
It's succeeded in the past to a limited, well, to a moderate extent. I can't really predict the future. And global, of course, there are parts of the globe that are very used to cooperation, indeed, where most of the transactions are. At the wholesale level, I'm not too worried, unless, well, this is beyond my pay grade, so maybe I'll stop there.
Oh, it's not.
My opinion is no better than anybody else who's listening to me. So.
But I invited you, so I want your opinion.
My opinion is if China wants to integrate, we already have the mechanisms, and there's nobody else who isn't in the habit of cooperating, given there's always the foot dragging on AML and always the usual foot dragging on safety and soundness. But we're in the habit. China wants a separate system. China will have a separate system. If it wants to play with everybody else, we'll play with everybody else.
You have a hunch of which way they will go?
No.
Okay. So we have a quick, yeah, Tara.
Yeah, 2 points to that. One, of course, it's not just the CPMI that convenes central banks and payments, but the BIS more generally, as you all know, is a place where central bank governors come to discuss some of these issues. So we are convening 60 central bank governors to discuss these issues and to try and address, some of these issues. That's point number one. Point number two is there's the incentives to improve cross-border payments exist for each and every single country. It helps trade, finance, it helps households, it helps businesses. So the incentives to step back from the system of global payments or cooperation, they're just not there. It's quite a technical issue, but solving that issue brings benefits to everybody.
Win-win, as some Chinese policymakers would say, or also non-Chinese. We have questions from Martin Charles-Empa at the Peterson Institute, in particular on CBDCs. He's asking whether CBDCs, central bank digital currencies, will interoperate better if they're with other CBDC systems versus with non-DLT, distributed ledger technology-based systems. For example, he mentioned Swift's recent moves. I'm not sure which ones, but you probably know and can explain. So, and what does that imply? I'm reading Martin's question for whether the US would need one to maintain the US dollar in cross-border payments if others around the world have them. I'm not sure I understood the question, but you probably have. Tara.
So, in my view, interoperability with CBDCs would probably be easier than interoperability with existing payment systems. However, both should be possible, both should be feasible, and we're thinking about interoperability models which include both. As far as the reserve currency, a lot of the CBDC models we're talking about are retail-based CBDCs to be used in a country. Some of them have transaction limits or holding limits on them. So it's not going to be a really widespread, massive CBDC that we're holding in our wallets, right? And so the role of the dollar is a very specific question regarding trade finance and then as a reserve currency. But I think that the issues regarding just a retail CBDC aren't really, they don't really affect that question. So the question then is, okay, what about wholesale CBDCs? And is that going to, what's the difference between the retail and the wholesale? What is the impact of the wholesale? Well, here, I think it can make central banks just simply more efficient in transferring currencies or PVP back and forth between central banks. So there's a lot of development going on in all of these areas. And thinking about those interoperability models that I discussed in the presentation are sort of key to figuring out what the path forward is for each of these individual jurisdictions and projects.
Of course, as you mentioned, is payment versus payment settlement, which is one of the ways to organize those infrastructure. Joe, on this issue of CBDC interoperability, also with SWIFT and other systems?
I don't quite see what DLT itself has to do with this, because you could, with permission DLT, you can do anything you want with conventional registries, and you could with permission DLT. So the technology is not too important. It's, again, I think Tara made the point. The big question is to whom do you open up the CBDC? The system is going to look like it's access. The interoperability challenges are very different depending on who gets access. And one of these days I'll try to figure out what CBDC does apart from displace that retail system known as physical currency. I haven't figured that out yet.
Have you figured that out?
Have I figured that out?
Yeah.
I haven't figured that out either.
Yeah, it's okay. So Martin has another question on trade-offs in liquidity needs. For example, spotty liquidity leading to large price moves when you have a 24/7 system with market payment systems operating all the time, connected to other markets. And I guess here there are financial stability issues, and Joe alluded to that. But can you expand a little bit? Maybe Tara first.
Sure. This encompasses a number of elements. It's not just liquidity. If we want to think about liquidity, we have to think about access options, banks, non-banks, payment system providers. We have to think about operating hours, which you noted, 24/7 or not. And then with that, we have to think about liquidity within those conditions, right? So there are individual building blocks that deal with each of these components that is going to affect liquidity in the system. We have one in particular that looks at liquidity bridges and the opportunities that a liquidity bridge could provide. I can tell you, with the current liquidity in our systems, there was only 2 examples to draw from. The report is almost finished, and we have seen that at this point there's not a lot of interest. However, the work has been done, and if we see that there's a need for such a tool as a liquidity bridge, we can take that off the shelf and have some work ready on that.
Okay, I want to give that a bit of a try. Right now, our big liquidity, at least in the wholesale level, the big liquidity demand is when markets open and close. And that liquidity demand will tend to go down when markets never open or close. And the effect of that is going to be much greater than the liquidity that will be there at sometime in Sunday when the sun comes up in New Zealand. The fact of markets never closing should actually maybe decrease liquidity demands, if anything.
So we do have a report on operating hours, quote unquote, end states. And in the report, we set out 3 different end states. So the first one would be central banks increase their operating hours just maybe already on the days they're open, but a little bit more. The third option is full 24/7. And then we have a medium option, which is increase the days, increase the hours, but you don't go full 24/7. So we did a survey of banks and fintechs, non-bank payment providers, and the results are pretty interesting. Those that could benefit from 24/7 operation, mainly fintechs, really keen to do that. Those that had to pay to increase their payment system operating hours were a little bit less keen on that full 24/7 spectrum. So I think we're going to see a place where we land in the middle, where we are able to increase operating hours through both in terms of days and in terms of hours. But I think for many jurisdictions, this is my own view, I don't see us getting full 24/7.
There's more of a sense of the differences between different jurisdictions' point of view, right? Because this is a hugely ambitious exercise of global coordination, but we have a question, for example, from Greg Smith on whether emerging markets will look at the CBDC issue differently because there's more of a risk of volatility in those currencies. Can you give us a little bit more of a sense, maybe, obvious things that are obvious to you as a practitioner, but where are the dividing lines among groups of jurisdictions, and what are the different, coalitions, if you will, even if you don't describe them as such, in terms of policy choices?
A very interesting question. Yeah. So to use an economist word, all these jurisdictions have different initial conditions, right? So we're starting with different, different systems. And the motivations, there's a paper that was that we just published in May. I showed one chart on it, which surveyed central banks about their CBDC development work. We also asked the central banks about their motivations for that work. And then we split those we split the motivations between emerging markets and developing economies and advanced economies. What's interesting, I think, is that, as you can imagine, emerging markets and developing economies have as their motivation, their top motivation, improving financial inclusion. Both emerging markets and developing economies and advanced economies believe that improving domestic payment system efficiency is important. This year, more thought that improving cross-border payments efficiency was important. So there's differences in the motivations there, and you can see those in the paper. In terms of, you also asked a little bit about, just in general, I think the cross-border payments program and whether there's differences in implementation. Again, going back to those different initial conditions, we recently surveyed our central banks, asked them about their developments, domestic developments, and where they were making progress. And I can tell you that everybody surveyed, every jurisdiction surveyed, is doing a lot of work on their domestic payment systems, but as you can imagine, in different areas. So one example is there are jurisdictions that would like to increase access to non-bank payment providers, non-banks. There are other jurisdictions that would need to have a legislative change to make such, to open up access to non-depository institutions. So there's differences in sort of the legal frameworks that's that's resulting in jurisdictions choosing different options while still improving their domestic systems.
Comments on this? One question I have, we have really, one theme that hasn't really come up yet, even so it's implicit maybe in some of what you have covered, is this issue of de-risking and cutting off correspondent banking relationships, which very much came up in context of anti-money laundering or concerns about terrorism financing, or more recently, perhaps sanctions. Can you tell us a little bit more about it? Maybe first the magnitude of the problem, what the experience of the last 10, 15 years has revealed, and how you connect that with your work at the CPMI?
Happy to. So we've been following the issue empirically by using SWIFT data, which is available. It's available on our website in an aggregated form. And what we've seen is that, as you noted, correspondent banking relationships has been on the decline for about the last 10 years. There's a number of issues related to that, and a number of reasons. First of all, early on, it was noted that a lot of banks had a lot of correspondent banking relationships that weren't active. They were inactive. So after the global financial crisis, when there was sort of a view to try to become more efficient, lower costs, there was a large scale review of many different processes and measures and relationships. So that happened. But the other thing that we have, and I've got a paper from March of 2020, you show that actually the jurisdictions that are losing correspondent banking relationships are those that we call bad actors. They either don't have robust AML CFT regimes, or they may be sort of a tax haven or have some other issues where they are not as safe. They don't have a safe and efficient payment systems, nor the robust regimes for oversight. We also found that once jurisdictions improved their safety and efficiency, robustness, so to speak, regimes, that they were able to gain back correspondent banking relationships. So it really is a matter of trusting another jurisdiction to have a very robust and safe payment system. That's one component. And then finally, I think the FATF standards are designed.
Selection Task Force.
Yes, exactly. Thanks. Are designed to help address these issues, right? And now we have digital currencies. We've got FATF has introduced new recommendations for virtual assets and virtual asset service providers. And the work is ongoing there to assess and implement those standards. What we don't want to see are any types of payments going outside the regulated system. So implementing these VA virtual asset and virtual asset service provider recommendations and standards are super important.
No, you've worked a lot on this, I'm sure, when you were at the New York Fed. Any reflections you'd like to share on correspondent banking and how to think about it?
I know a lot about the plumbing of correspondent banking, but I think we're talking about the business of correspondent banking, which is, again, beyond my pay grade.
Well, you're belittling the scope of lawyers. We have a question about stable coins from Daniel Heller, who is asking whether issuance, redemption, and transfer functions of stable coins are well regulated, or rather, if they are well regulated, why should they pose a risk to the international monetary system? Tara?
Hello, Daniel. This is a very this is a very good question. So the issue, well, the question is, are they well regulated right now? And the answer is we have just put out our standards in July. There are a number of jurisdictions right now that are establishing regulations for stablecoins. I can say that, at the outset, I think there was a tendency to look at stablecoins as the glass half empty, but there is scope for improvements, for them to make improvements in cross-border payments. And for that reason, we do have a building block on stablecoins. And we're thinking about, okay, what does a stablecoin need to be well managed, risk managed? And then how can it enhance cross-border payments? And where, right now, between standard setting bodies, are there any gaps or overlaps or underlaps that need to be addressed? So this work is ongoing, but we should think of, both sides of it. There's a glass half full side of things, and we're working on that. There's the glass half empty, preventing risks, mitigating risks, and we're looking at that as well.
I would look at it. I would look at a stable coin. I view them as the issuers as private central banks. They create a monetary order of their own, which need not be linked to anybody else's. Hayek, of course, was maybe the first to write about that back in the 50s. And the question, I think, is what problems can private central banks create? One problem I would suggest is they're usually in other lines of business as well. And the cross businesses may or may not be a safety and soundness problem, but I prefer privacy dollars to Mark Zuckerberg's version, even despite the low degree of privacy that dollars have.
But if I can push you on this, and probably that's a stupid question, but aren't any commercial banks private central banks to a certain extent? I mean, the very notion of bank money is that you know, there's a fuzzy boundary, or what? Where do we put the boundaries that put the central bank?
It's quite clear. They don't create their own. They do create their own media of exchange. They do not create their own unit of account. They take that from outside.
I would just add to that. I agree with Joseph. I would just add to that so we consider commercial bank money, central bank money, to be the ultimate settlement asset. We consider commercial bank money to be just second to that. But why? Because we trust commercial banks. We supervise them, regulate them, we oversee them. And so we feel pretty confident about the soundness of commercial banks, given the regulatory environment. So with that, we think, you know, if we think about our two-tier system, we consider that, well, second to commercial central bank money. Now, if we're talking about a completely private system that is outside the regulated perimeter, so to speak, then we don't have that trust in that provider. And we don't have, as Joseph said, it's not tied to, it's not anchored to a nominal unit of account. It may be some of these cryptos, for example, are linked to a stable coin in an attempt to try and find some stability, but then the stable coin might be backed by some safe, quote unquote, so-called safe assets, but it's not central bank money.
Right, which goes back to Daniel's question. Indeed, regulation is probably not enough to answer all the questions. We have two questions by Nguyen Nguyen on emission trading systems and the carbon trade. Is that part of your committee work, Tara, or is it a completely separate set of considerations? Because there's a lot going on also in that space.
There's a lot going on in that space. It's separate from these considerations that we're talking about today. I would put it more in the climate side because it's really important in that space. And we're doing some work there, but I wouldn't link it to today's topic.
Okay. We have a question from Dr. Ahmed Kari Bahlul, sorry, on the changing world. So he mentions in particular the war in Ukraine. In a way, you already addressed that when we talked about China, but maybe if you can expand, does the turmoil in the world this year, and particularly the war, in your view, affect the agenda of the initiative, or is it basically, chugging along without real impact from what we've been experiencing since the beginning of 2022?
Well, there is real impact to the people of Ukraine and the people of Russia. And living in Switzerland, we've seen quite a lot of refugees here. So we've been impacted very significantly, I can say that. And but whether it is affecting the work of the committee, as I noted, there was some work done in considering the impact on payment systems that that the geopolitical situation created. But more generally, I think we are unified in thinking that we need to go forward and improve cross-border payments for everybody. Ukraine is not a member of the CPMI, but I know that they are trying to make improvements to their systems, especially given the challenges that they face right now with infrastructure.
As a long-standing observer of the scene, have the events this year changed your outlook? Do you think they changed the direction of travel?
We're talking to me or Tara?
To you.
To me. Well, the big change the last year or two, I wasn't thinking so much of the Ukraine war, I was thinking more of climate change, that you have a bit of a conundrum that central banks typically have a lot of disinterestedness and capability, often much more so than much of the rest of their local government. And so there's a tendency to keep tasking them with more and more and more. And the more you task a central bank, the more it starts to resemble a government, and that has certain problems for democracy. Platonic guardians are not self-government. And that does bother me a bit. The constant, and in the short term, it usually makes sense, turning to the central bank to solve another problem, another social problem. It makes sense in the short term, but it is in tension with democracy, I think.
I guess my question was more about this question of the impact of the war in Ukraine and on the shape of the global financial system, right? Because we've seen, I mean, many people would say, you know, the pro-Ukraine coalition has decided to freeze the Russian central bank reserves. That introduces a whole new dimension of politicization. And that was not a decision of the central banks. It was a decision of the political leaders. It was emphatically not monetary policy. So does that, I mean, do you see already or coming forward structural change in the global financial landscape, or is it just too early to say, or is it basically not that impactful because the coalition against Russia and for Ukraine was so large? How do you look at it?
It's business as usual. The free flow of money, as it were, more or less didn't last very long once the Bretton Woods structure of exchange controls collapsed, because generally the United States, or the United States with other countries, would put more and more restrictions, would freeze more and more transactions. The US, of course, is the world's greatest single source of sovereign risk, and or has been, with an active policy of sanctioning and currency freezes and some extraterritorial grabs of money that by ordinary international law standards has nothing to do with the US. The rest of the world has started to coordinate this, and this is just part of a trend. Ukraine is the next step in a long-going trend of first US and then a more generally coordinated foreign policy involving the financial system. Can live with it.
In a way, there's a paradox here, right? Because you mentioned the rest of the world joining the US in this, which on the face of it would go against the narrative of fragmentation, right? So is it fragmentation, or is that kind of, you know, coalescing of most of the system?
Well, there is China, and there is there's the global South, which, you know, is beginning to get some real economic power and is certainly not joining this this set of sanctions. I guess, but the trend has been that the wealthy, financially plugged in jurisdictions, at least before China, could do pretty much what they wanted, because nobody else has much of a choice. Now there may be a little bit more of a choice. That could become interesting, but the trend has just been a steady and continuous one. This is no real surprise. It's just a little more of the same stuff.
Lara, any comment on that? We have a much more technical question from Gerard Hartsink on the building block number 19, on the international dimension into CBDC design. And that includes a statement that reads the importance of interoperability between CBDCs. So we already touched upon that, but the question, let me read the question. How does the BIS take care that the central banks include aligned policy standards and technical standards? He refers to ISO TC 68. I have no idea what that is, into their design. So we're back into the question of interoperability of CBDCs. We had Martin Charles-Empa's question about that. Tara, any additional points to Gerard?
Yeah, just one. So while the CPMI, standard setting body for payments, clearing, and settlement, has been working on sort of these ideas and concepts of interoperability and interlinking, and also then just scanning the horizon, so to speak, and doing our survey on what central banks are doing, it's really the BIS Innovation Hub, also housed here, that's looking at creating these proofs of concept, these pilots, these tests. And so we're seeing different jurisdictions work together through the BIS Innovation Hub to actually make real projects. So we're seeing a number of those. They're proliferating. And so what we're seeing in those is we're learning lessons on, the programmability, the interoperability, some of these things that need to be addressed in terms of maybe memorandum of understanding also, and like legal and regulatory issues. So that practical application, the practical exercise is happening in the Innovation Hub, and we're seeing some good progress around the centers. And if for those of you that don't know, there's a number of centers now. There's the Switzerland Center, which was the first, and then we have Stockholm, Toronto, London, Singapore, and the EU, and there's one more. So tons of projects going on, all looking at these really practical issues.
And indeed, we had Benoit Curé presenting on this 2 years ago at the beginning of the series when he was the head of the BIS Innovation Hub, and it's probably a good idea that we should catch up with their work in the meantime in a future session.
Sorry, the last one is the partnership between the BIS and the New York Fed in New York.
And that's a way of poking Joe again as a lifelong New York Fed person. Joe, you said the whole program, if we want to move towards conclusion, was challenging and ambitious. How optimistic should we be? This looks like a very comprehensive international coordination effort. And the received wisdom is that these cannot work in current conditions because we're in a world of rising nationalism and fragmentation. So is that a paradox? Is it doomed to fail? How do you look at that?
Well, to me, the question isn't, are we going to get what we want? Because we won't. The question is whether it's worth trying, which I think it is very much. We're not going to get the kind of, east to west payments. I don't know when there'll be an architecture that will handle them. But this kind of ambitious program, it's as much of a social program as it is a technical program. And social programs always fail in part, and they're usually worth doing.
That's an uplifting conclusion for our session, I think. And I've seen Tara nodding. Thanks so much to both of you. It was very enlightening. I learned a lot. I hope our audience did as well. We'll have the next session of the series on September 15. We'll take stock on audit oversight, because actually this session was planned before there was a deal, but now there is a deal between China and the US on inspecting auditors of US-listed Chinese firms, which was a very long-standing dispute. And so we'll debate whether it's getting resolved or not with excellent experts for that, Liza McAndrew Marburg, who was at the US Public Company Accounting Oversight Board until recently, and Eric Forney of DLA Piper as a law firm. With that, thanks very much to Tara Rice and Joseph Sommer for today's session on the CPMI cross-border payment program, and everybody have an excellent rest of your day. Thanks.
Thank you.
Thanks.